The broadcast is now starting. All attendees are in listen-only mode.
All right, good afternoon, everyone. Today is May 16th, 2019, and it's almost 1 o'clock. This is another episode of CFRN Thursday, where we go over the CFRN trade setup, but in slow motion. Okay, so the goal this afternoon, number one, is to go over the disclaimers that I have to talk about before I present. Number two, I'm going to go over the trades setup and break it down. So for those guys that are brand new, this will be a good cheat sheet or syllabus that you can lean on. So when you go inside the training room in the morning, your eyes are wide open and you have more of you can absorb what's going on, okay? Some things are moving quickly in the room, in the training room, so some things just are too fast. You can't absorb it. So my thought was, look, I'll slow it down, and then at the end of the trial, if you guys decide to continue down the path, well, at least your eyes are wide open, and you'll have maybe a better an evaluation on whether you want to pursue this or not. Okay. Platform that we are featuring is the DtPro platform. It's the platform I support, and it's the same platform that Michael and Dwayne use inside the training room. Okay, so what you're looking at now is the DtPro platform with the indicator set already built into it. Okay, if you take a trial, you'll have access to the platform. Okay, it comes with data. You don't have to do any, you don't have to go out and find data or anything. You just log in, and with a few right clicks, you can literally just, enable the indicators. I mean, it's really simple, and I've done some install videos on how to do that too. So there's not a lot of heavy lifting when you're doing it. It's all there for you. Okay, and then not only are we going to go over the setup, what I'll end up doing is after I go over this piece, we'll go inside a live market and we'll look for the same setup, and I'll show you, how to execute on the DOM. And we'll get into trades. We'll trail the stop. I'll show you how to manage them, and I'll show you when to exit. Okay, and we'll do it in, like I said, in slow motion. Okay, so that's the goal, is to do it in front of you and where you guys can ask questions. And I'm going to label over probably a handful of things, some of the traps that people fall into. So I'm going to go over that stuff, and that's it. Okay. This is live, so what I mean by that is my phones are going to buzz at some point, so I'll put you on hold, hit the mute button, and pick up my line. So don't, just giving you advance warning on that. What I'm going to do now is let me shut down the live. Make sure I'm in demo. Okay, so I don't screw anything up there. All right, so I'm in demo mode. Okay, so that's it. So again, if you're brand new, this is going to be a great syllabus for you. And if you are a CFRN member, this is going to be a good time to get some additional screen time, get your questions answered. We'll, like I said, if you're spinning your wheels somewhere, please ask. I'll give you my my experience with it, and this will also give you guys a chance to learn more about the personalities of the markets that we're trading. Okay, so we're going to spend about an hour. If there's nothing going on, then I'll cut it short. But we got some volatility here, so we'll see if we can't get our hands dirty a little bit. Okay. So again, if you have questions, just pop them in the box, and then I'll address them. Okay. May not be right away, but at least I'll get to it. All right. So let's start with disclaimer. There's a lot of familiar names in the room, so if you've been, if you've been in here, I'll spend probably 5 or 10 minutes going over this. So if you want to go get a cup of coffee or something, that's cool. No hard feelings on my part. So because this disclaimer really is for the brand new guys. Okay, the guys that are reading stuff about futures and learning about what we do and how we do it in our space. This is kind of a big warning flag for you. And what it says is really, basically, this is a leverage market. So you're going to do everything on margin. And therefore, if you're not using stop losses, you don't have a trading plan, you're not engaged in what the market's doing, you're not looking over your trading accounts, you're not abreast of what news reports are going out, you can lose everything and some in your trading account if you're not doing all those things. And this disclaimer is going to hit you right smack dab in the face. Okay, so that's why I don't take it lightly. I've been doing this for almost 25 years now, and I really have seen the good, bad, and the ugly. Okay, so it's not a great way to start a webinar, but it is, an eyes wide open approach, and that's, what I'm advertising here. Okay, so not everything is great. So the good thing is, if you go down that CFRN path, right, we're going to go over a set of rules, right? We just talked about it. Every trade's going to have a stop loss, okay? You're going to be on a 4-tick range chart, so you really have to be actively engaged in what the market's doing. You'll have to be in front of a trading screen. So, you're going to be doing all the right things, all right? Yep, you're going to be doing all the right things. So this disclaimer being out there, it is a warning flag. You're going to water that down a little bit if you're following the rules and using stops and doing all that stuff, going down the CFRN path, okay? No, it doesn't completely wipe the risk away, okay? You can still lose. You can play stop losses. You can, there could be another tweet that pops up, right? And the market could go into a tailspin. You might have a stop loss in. Yes, that stop loss could get jumped. That means it's not executed, and you would have unlimited risk in the marketplace if that stuff happens. The good thing is, because you are in front of the screens, and the worst case scenario does happen, as I was telling Bart this, I think last week, if all hell breaks loose, you hit exit at market and cancel this hotkey up here, and you get the heck out of Dodge. Okay, that's what you do. You just get out, and then you kind of figure it out. Okay, so yeah, that's a scary part of the disclaimer. So again, I don't like to just throw it up there, talk about it, tell you read it, and then throw it on the blanket. It needs a few minutes and something to talk about. Okay. The other thing is too, is that the money that you're putting in a trading account should be risk capital, right? And if you lose it all, it's not going to change your lifestyle. So that's the other part of it too. So that's that one, that slide there. Okay. All right. The second slide is my relationship with CFRN. Okay. I've been in the room just about every morning for the last 8 years. No, I don't work for CFRN. CFRN doesn't work for Daniel's Trading. Okay, it doesn't work that way. There is a fine line in between us. Okay, it's their indicators. If you decide to go down the CFRN path, any money that exchanges is going to be between you and them. Anything on the website, the videos, Thursday night workshops, the Logic 247 product, concierge, trade alerts, daily doubles, all that stuff, you'd reach out to them directly. Okay, here's the Logic 247. So you would reach out to them directly. All right. What I represent is the platform, DtPro, the one that I'm featuring. I represent the brokerage, the execution. So if you decide, hey, I'm going to do this, and I want to use DtPro because Mike and Dwayne are using it, then you and I would talk and we would discuss, you know, how to download the platform, how to download the indicators. Okay, next step is the demo. Okay, the next step is how do we open up a live trading account? You know, the minimums, all that other stuff. So that's when you and I and the dialogue begins between us. Okay, I'm in the room every single morning. I know the setup. I do CFRN Thursday for a reason. Okay, there's a mutual benefit. Okay, we all know that. So the indicators are available at Ninja. We all know that. The difference is at the desk here, I'm going to spoil you. All right, that's what we do different. If you have problems with the platform, you can call the desk. You have a live body to talk to. Big deal. You know, when things are, you get frustrated. The other thing is, I know the setup. So if you're struggling, we can talk about it. It's not unusual to have people send me screenshots and we'll go over the setups. You know, if they're spinning their wheels or they have questions, there's time for that in between phone calls. So we'll do that too. Okay. So do a lot of hand holding at the desk here. So if you need it and you want support, this is where you go. Okay. What else? You know, a lot of times people, you know, Dwayne's on the radio, Mike's doing planes, trains, and automobiles. He's running around. So a lot of guys will reach out to me because they know when they call the 866 number, they know I'm going to pick up. So if you feel like, hey, you know, I need to get a hold of CFRN, or, you know, can you have Mike or Dwayne call me? That's fair game. Just give me a call and I can always text them and say, hey, you know, Bart's looking for a phone call. Can you shoot him an email or text and let him know, you know, that you're going to do that. So, you know, we have a relationship, okay, but there is a strict line in between, okay. So we have to disclose it just for that reason, okay. Let me delete that. Our relationship really started 8 or 9 years ago. It was just radio. So it was Dwayne on the radio, and him and I hooked up somehow. I forget how we got involved, but he asked me to come on the radio program, and we were just talking about markets, and I was answering questions for people. And the biggest thing that I saw in the question box as they were popping in is they kept asking him, hey, show us how you're doing, you know, show us how to do this, how to do this, how to do this, that kind of thing. Then he got together with Michael. They are TradeStation developers, and our platform does read easy language. So I just happened to be at the right place at the right time, and we offer the platform for free, so that wasn't an extra cost to any CFRN members. You know, so it was kind of like a perfect fit. So it's kind of how it started. And so, you know, as the years kind of went by, there was a need for people, you know, people were calling a timeout and saying, hey, slow down. And so I offered to do it. So again, it's a mutual benefit. If you do well, I'm going to do well. So we might as well try to be on the same page. So that's it. All right. Disclaimers, check. So we got to take that off our list. Now we'll go over the trade setup. Okay. So the guys that are brand new, like I said, this is going to be your syllabus. All right. So let's see if we can knock this out. Let me tell my mom. I will text her back. $836. All right. Take mom off the list. Check. All right. So the setup. First order of business is the time frame. We are on a 4-tick range chart. That might be unusual for people because, you know, chances are you are on a Jiminy Christmas. You're on a time-based chart mostly. Okay, so you may be on a 30-minute, right? If you're following logic, you might be on an hourly or a daily if you're more of a, you know, longer-term trade. The idea is to get on the 4-tick range chart because we are scalping. Okay, so upper left-hand corner of the chart, you have this little time frame here. Just hit the drop down box here and go down to custom. A box opens up, just select range bar and make that one look like a 4. All right, just hit OK. You're staring at the ES. Okay, that's the S&P E-mini if you're brand new, and on a 4-tick range chart. Okay. The first trap that people fall into is that they'll hit custom and they'll select tick bar. Someone trying to get in? Okay. Tick bar, and they make that 2 look like a 4. That's that same chart, but on a tick bar. If you're staring at anything that looks like this, you know you fell in the first trap, so it should be on a range. Okay, range bar. All right, so here's my first phone call, so stand by. I think we have people are trying to get in the room, so one sec. Okay, I'm back. So so the first order of business is the time frame, right? We're on a 4-tick range chart. So what that means to you is the height, okay, of each candle is 4 ticks in height. It's very simple, okay? Now, the reason why that might be important to you is this. In the training room, you're going to hear Michael start calling out highs and lows, right? What he's doing is he's getting ready to place an order in advance. Okay, he's going to be what he calls proactive. So if he knows the height of each candle and he knows it's going to be 4 ticks in height, then he can be proactive. Okay, and what that means is this. Okay, if the market is right here at 28.82, okay, what he's doing is he might be placing a buy stop above the market. So if the market takes off, he's going to be stopped into the position, or if he might be placing a sell stop, which is underneath the current market price. Okay, and so if the market does break down, okay, he'll get stopped into an entry on the way down. So if it just falls apart, he's gonna, he'll be involved. Okay, so that's what that means. Now all the rules have to apply. Okay, and the rules that we're going to go over here in a minute are going to have to be in place. Okay, but he's going to be, that's his way of being proactive. So when you hear that, okay, he's getting ready to be proactive. In other words, he's going to be placing orders in advance. Okay, so if you want the cliff notes on how to do that, it's really simple. Okay, which is this: you just, whatever the current high or low is. Okay, so if we're staring at this bar here, and if the low is 2880.75, all you have to do is add 5 ticks to it, and that is the number you click on. Okay, so if that is the low, then 1, 2, 3, 4, we would right click here. It's a right click. All right, right click. All right. If that happens in the next hour, I'll show you how to do it in real time. Okay. But the bottom line is you're going to be adding or subtracting 5, and whatever that number is, that's the spot you right click. Okay. So there's 2 ways to get into a trade. We can either left click and place a limit. So like this. Check this out. Left click. We can either place a limit to get into the market. So we would wait for the market, wait for the signals to pop up. All the rules apply. When it qualifies, we can either left click and get in, or what we can do, oops, I better cancel that, or we can right click above the market and create a buy stop. All right. So if we do it that way, Okay, it doesn't get executed until the price gets up to that level. Then it becomes a market order. Okay, so notice it's not filled because we really have to punch through that level in order for us to get filled. Okay, and the same is true on the downside. If we get a sell signal, we either can left click on the DOM, okay, and we created a limit order, or we can be proactive and sell it on a stop, which would be another right click, but in the red, because we're trying to get short. Okay, so there's the order there. All right, so that's two ways you can get in. All right, so we have nothing working right now. So all that being said, we need to get on the 4-tick range chart, and that's where we're at. Okay, 4-tick range. Now the buzzwords here. We're going to work on the top portion of the chart here. Okay, so the red and blue line here is referred to as the MA1. Nothing really fancy about it, just moving average 1. Okay, and the green line is called the BBC. That is short for bullish bearish cross. Okay, because together that leads us into step number 1, which is this. When the MA1 is crossing the BBC and the MA1 is red, that's called a bearish cross. If the MA1 is blue, that's a bullish cross. Okay, the one that Michael has highlighted here is called a bearish cross. And the reason is the MA1 is red. Okay, so what we're looking for at this time is an opportunity to get short. Okay, why? Because the MA1 is red and that's a bearish cross. So take note that I didn't say go short, go long, go short. I didn't say that. So we're looking for opportunities. Okay, because when step 1 is in motion, okay, we're looking for the market to do the normal thing after the cross. Okay, which leads us into step number 2, which is a pullback to the BBC. The BBC is that green line. Okay, we're looking for a pullback. So after the cross, the normal thing for the market to do is to flag, gravitate, move toward. We're looking for the market to gravitate toward that green line. Okay, so not only are we looking for it to touch the green line, but then we're looking for a down close. Okay, this arrow highlights the down close. The down close is red. Okay, so now you're kind of getting the picture. Red MA1, red candle, when everything is all the same color. Okay, when we check all the boxes and it's red, 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 that stacks all the probabilities in our favor when that happens. Does it happen all the time? No, it doesn't. Okay, but when it does, there's nothing else to filter out. Okay, it should be just a reaction from the chart to the DOM and push a button and place the trade. And then once the trade's on, just follow the rules and manage it, period. Okay, so when everything's the same color, that stacks up all the probabilities in your corner. Okay, so excuse me, we have a red MA1 and we have now the down close. Here's a big question I always get, and it's being asked right now. Why don't you just sell it? Put an order in right here and sell it. I mean, look at all that you would have gained on it. Well, it's not that easy because sometimes the market will just do this, just blast through that thing. Okay, and so what you're doing with this candle here, excuse me, you're sacrificing price for action. Okay, you're sacrificing price for action. Because what you're saying is, hey, the market did the normal thing. It pulled back to the green line, and now it's rejecting it. Hey, you know what? That's giving me the comfy cozies that maybe this thing is going to go down. Okay, so you're sacrificing price for action. All right, so step number 1, check. We have the bearish cross. Step number 2, the market did the normal thing, touched the green line and had the down close. All right, So step 2 is checked off. So now our eyes are going to gravitate toward the slingshot, okay, which is the oscillator portion of the chart, which is also where the trade basically exists. It exists down here, okay, and I'm going to show you why. All right, so 1 and 2, okay, we got checked off our list. Now our eyes gravitate toward the slingshot, okay. Now, buzzwords here. The red and blue line is referred to as the cycle. Okay, and the green line, well, it's the green line, nothing fancy about it. But here's why it's important. This cycle, we talked about everything being the same color, right? It's red. So we should get excited about that, because not only do we have a bearish cross and we have a down close, but we also have a cycle that's red. And what it's telling us is the momentum on this NQ chart on the 4-tick range bar, the momentum is bearish. Okay, and notice, I don't normally talk about this, but I'm going to. Notice the slope on this sucker. Okay, it's got a pretty good slope. Okay, that should give you the confidence that this market it's got some bearish momentum. Okay, and what this green line pulling away from the cycle is telling us, this price action up here, the normal thing, okay, what's implying is this is just a pullback in this ongoing downtrend, okay, and this space in between here, between the green line and cycle, is the divergence or the separation that Mike's talking about in the trading room. Okay, so we have a market that has some bearish momentum, okay, that's set by the cycle. Okay, this price action, which is normal, it pulls back to the BBC along with the green line pulling away, okay, is the divergence he's talking about. Okay, so that is step 3. Okay, so once step 1, 2, and 3 is completed, there's nothing left to do but go inside the DOM and execute. Okay, because what we expect to happen as soon as we get into the trade, and it would be right at the close of this candle here, okay, we would expect the green line to ultimately come down and touch the cycle as it does here. And at the same time, price will make a new pivot low. Okay, and it's at this point here, we're going to cover the trade. Okay, because again, the normal thing for the market to do, or what's happening in the slingshot, and this is why the trade exists down there, so we expect the green line to do this, do this, do this, until the cycle, right, turns blue. And now the momentum has turned bullish, right? So now we're looking for buying opportunities. So what we want to see is the green line to build divergence underneath it, okay? So in a bearish market, okay, when the cycle is red, we want the green line to be above it, okay? And in a bullish posture, we want the green line to be underneath it, because the game plan is we're going to sell that top, sell that top, sell that top, buy that dip, okay? Because we expect the green line to gravitate toward that cycle each time, okay? That's normal, okay? Now we know the market's not normal, so that's why we have to use stop losses. Every trade has an 8-tick stop attached to it, right? We can control the risk. We can't, we don't know where the market's going to go all the time, all right? Things change and all the time, so you have to defend against, uncertainty. But the stop is 8 ticks away. That's a hard rule. If you're brand new and you're trading gold and crude, because you're going to see that, you're risking $80 a contract if you're dead wrong every time you push the button. Okay, if you're going to trade the S&P, it's closer to 100. If you're trading the mini Dow, that's closer to 40 or 50 bucks. Okay, so that's what you're getting into. Okay, Mark's question is, so the entry is on the close of the red candle. That is correct. So let me clean up the board here. It would be right here. Whatever that price is, the close of that candle, okay, is the order. That's the order I would place inside the down. Okay, so the close of that candle. So if the close of the candle is 28.85, I'm going to simply left click in the DOM at 28.85 if that's the close of that red candle. Correct. Okay. And that's after it touches the BBC. So here's an example, ignoring all rules. See, Mark, how it touches the green line, okay, and then it closes in the direction of the trend, and the MA1 is blue, so we're looking for a blue candle. Okay, the close, come on, close was 28.84.5, okay, so I would go right at 28.84.5 and left click. That's how I would do it, okay. This had a lot of the rules to it, right? We had a bullish, this is a perfect example. Bullish cross, the MA1 is blue. What's the normal thing for the market to do? Go back to the green line. It should touch it, and we should be looking for an up close. What color candle should we be looking for? A blue candle. Why? Because we have a blue MA1. What color is the cycle? It's blue. Where's the green line? It's underneath it. So we have that separation we were just talking about. What should the market do after? The green line should get into the cycle. What should happen to price? It should make a new pivot high. It just did everything right here. Okay. It's this candle here. The close and the direction of the trend. The trend is defined by step number 1. The MA1 crossing the BBC. Okay? The MA1 crossing the BBC. Here's another example. Okay? Let me just go left. Here's a bearish cross, right? What color is the MA1? It's red. So the normal thing for the market to do is gravitate toward the BBC. The BBC is the green line. Here's the touch. Here's the close and the direction of the trend. The red candle. You're looking for a red candle because we have a red MA1. Okay? That's what you're looking for. All right. So back to the drawing board here. A good question, Mark. Okay. So that's, again, that's why the trade exists down here in the slingshot, because we expect that to happen over and over and over again. Okay, we expect that green line to pull away, get into the cycle, pull away, get into the cycle, okay, and then repeat itself to the upside when things turn up, right? All that's great, and the biggest thing that needs to be happening is that in order for all that to take place, we better be trending, and we better be making lower lows on the way down. We should be making some higher highs on the way up. Okay, that's a big deal. Okay, a lot of times we get hypnotized by what the market's doing, but we forget to look left, all right, on the chart to identify whether we're actually trending or not. And that's one of the big traps that people fall into. And it's easy to say it should be trending, it should be making lower lows or higher highs, but in the heat of battle, it's a little difficult. Okay, people have a hard time with it. Okay, so in the end, if it's day one for you, okay, if you're going down this path, you're not learning to pick the top or pick the bottom and trade it from point A to point Z. That's not your game plan. You're going to take a piece out of the middle, okay, and along the way, you're going to be moving the stop, moving the stop, moving the stop, moving the stop until that green line gets into the cycle and it's time to cut the trade loose. Okay, so you're signing up to scalp. Okay, You're signing up to be in front of the screen. Okay, this is the screen. You're signing up to move this down, move this over. You're signing up to get inside this DOM and buy and sell. Be really aggressive. Okay, so that's what you're signing up for with this. So that's kind of the game plan. So in the next 45 minutes or so, we're going to look for the setup and we're going to try to take advantage of it. Okay. So here we go. Now there was one right here. There was potential there. Okay. So we'll look around. All right. First order of business. Okay. If you have a piece of paper, okay, you're taking notes, whatever the deal is. The number one thing that should be on that piece of paper is, are we trending? That's the first question you ask yourself. Are we trending? And underneath that, what I think you should do is you should write down this. Get in the habit of hitting the zoom out button. That should be your next course of action. Okay? Hit the zoom out button. Because a lot of times we get hypnotized by what Michael's looking at on his screens. Okay? We see this and go, man, this is perfect. We're making some higher highs. Everything's there. This is a trade setup. I would almost bet Michael's in this trade, took advantage of it. Okay? But if you zoom out a few, okay, the picture might not be so clean. Okay? It may not be, it may look like we're just trading sideways. Okay? So my point is, get in the habit of zooming out, because that might, just a few clicks might be the difference in a winning trade or versus a losing trade. Because if you zoom out, you might find that we're bumping up our head against support or resistance at a level that you didn't see when it was blowing up this way. Okay? And you're going to see that happen a lot. Okay? So I'll point that out. All right? So for the moment, you're going to see me zoom out, and I'm doing so now. Okay? And we're making some higher highs here. So, if it qualifies, we'll try to take advantage of it. Okay? So let's look for something that's a little bit more easy and obvious so we can sink our teeth in it. All right. Here's the crude oil in June. That first question on your piece of paper, are we trending? What should you do? Zoom out. Are we trending? No, we're not. We're sideways. Okay? There's a top here, and there's a top here. There's a bottom here and a bottom here. Look at dynamic support and resistance, how they're side by side here. Okay? This is a market. Okay? That's trading sideways. Okay? So that's disqualifier number one. Okay? We're not trending. Okay? Disqualifier number one. We are not trending. When we're not trending, we don't push any buttons. We want to make sure it looks easy and obvious. Okay? Is there a minimum time frame to know if it's trending? No, just if you're on a 4-tick range chart mark, use the 4-tick range. Okay? Just zoom out. This will tell you a lot. Okay? You'll see this a lot of times blowing up. But if you just take a few minutes to do this, okay, that might keep you out of a bad trade. Might keep you out of a good trade too. You don't know. But a lot of times, looking left, okay, looking at over here, will let you know whether we're trending or not. Okay, you don't have to go to a 30-minute. You don't have to go to a 5-minute. Okay, you don't have to go to a 1-minute. Just zoom out. That's it. And if it's not easy and obvious, you don't do it. You're going to be on a 4-tick range chart, and you're going to be looking at a half a dozen markets. So no, it's got to be easy and obvious. That one's not to me, so don't touch it. Okay. Natural gas. Okay, notice I zoom out. What's interesting about this is that we were double topping here, right? We finally broke this level. Okay, so now we ended up, I would say, hey, now we could start trending. Okay, we're starting to make higher highs. And then really start looking at long, getting long at some point. Okay. For the moment, okay, we have the bearish cross. Okay, so right now we're congesting here. But I want to make another point. Okay, and that's this. I showed you step one, right? Step one is that cross, the bullish or bearish cross. Here's the second habit I want you to get in the process of doing, okay? Which is after the cross, when that MA1 is crossing the BBC, I want you to engage the trend line. That's this button right here, okay? The trend line, okay? There's going to be two reasons why you do that. Number one, we know the normal thing for the market to do is to pull back to that green line, right? That's normal, okay? There's going to be some cases where this market has so much bullish or bearish momentum, it's not going to get there, okay? If all the rules apply, that means we're trending, we're making higher highs or lower lows. We have the bullish or bearish divergence down below, okay? If we can't get to that BBC and it takes off, okay, those are standing orders to take action, okay, to get into the market. And here's a good example of it right here, okay? We had the bullish cross here, right? Okay, so your spidey senses go off and say, hey, I need to be looking for buying opportunities, right? And I'm looking for that market to pull back to this green line, right? So this is why you engage the trend line, because as we start flagging or moving toward that level, you're going to want to draw a trend line. Because if this happens, okay, where the market doesn't quite get to the BBC and closes above the trend line like it does here, and you got a, look at this, a blue cycle with a pretty good decent slope to it, and you got your separation, and your MA1 is blue, all the ingredients are there, okay, and it's time to get long. Okay, so we would go inside the DOM and left click, okay, and take advantage of it going up. Okay, so that's why you get in the process of the habit of drawing trend lines, because you never know if it's going to get here. All right, now here's a case where it's starting to do it. We don't know this after the fact. You draw the trend line. Okay, we don't know if it's going to take off again. All right, it doesn't. Draw the trend line. Okay, finally we get to the BBC here, right? We have the up close. Okay. Is the cycle blue? It is. Okay. Do we have separation? Absolutely. Okay. So there's no additional information other than to push a button inside the DOM and get long. Okay. As long as we're making higher highs as we're doing. Okay. Now, sometimes when we get a pullback to the BBC, that is an up close. That's a pullback to the BBC, and that wick, or that close, is an up close. Doesn't have a blue body to it, but that's a doji, okay? And as I said earlier, we're going to get in the habit of drawing trend lines, right? Now, here's the up close. What has changed? This has changed, the cycle. Okay, it's not blue. So what does that mean to you, right? Well, number one, that should mean if the cycle is a different color, okay? If it's a different color, number one, it's watering down the probabilities, okay? Number two, if it starts slanting against you, against the trend at a 45-degree angle, that is the second disqualifier. Okay, that's a big trap that people fall into. Okay, okay. If it turns color on you, all right, that means something's up. It's watering down the probabilities, and then if it starts curling over, once we get this up close, that's it. That's the second disqualifier. Don't push any buttons. Okay. What that means is the market is either going to make a bigger correction, okay, or it might trade sideways, which ultimately might lead to a cycle reset, okay. A bigger retracement is what that means, okay, a cycle reset. All right, and then the third disqualifier, as we know, is that black step line there. that could be used to help trail a stop along the way. But also, if that pierces the BBC at the time of the entry or the close, that's our third disqualifier. And usually that's associated with a cycle that's turning colors and starting to curl over. All right. So we have 3 disqualifiers that we breezed through for the most part. Trending, okay, that's no good. Number 2 is the cycle turning color on us, and 3, that black step line piercing the PVC. Any of those 3 things are happening, you're not doing anything. All right, so your chart should be marked up with trend lines all over the place, okay? That's what you should have. And what I would do also is get in the habit of getting rid of those. Quick way of doing it is left clicking on select all down below. Notice how that X highlighted. You left click on it, okay? That'll delete all the trend lines. All right, so 1 second, that's my phone. Someone trying to sell me medication in Canada. All right, we went over disqualifiers. Let's get back in business here. Let's look for something to do. Okay. Smokes. Gold. Gold's down 11 bucks today. I think that would be trending. So I'm zooming out. Okay, notice that's the first thing I do. Okay, right now we're kind of stuffed in a box here, right? Sideways. So no trending action in the gold. If you're unsure, number 1, don't push any buttons. But number 2, dynamic support and resistance side by side like this is usually the tail. Okay, it'll tell you. Okay, that's when we're not going anywhere fast. Okay, we looked at crude earlier. We noticed that it was trading in this range, and now we broke out of it, right? We have some higher highs. So this is a legit market that could be trending. And we have a bullish cross here, right? The MA1 is blue and crossing the BBC. So what did I just talk about? As soon as you get a cross, engage the trend line. Why do we do that? Because we are expecting the market to do the normal thing, which is pull back to that green line, right? But we don't know if it's going to get there. So in the process, we are going to draw the trend line. So I'm looking for another down close in order to draw the trend line. Okay, in order to connect the dots, okay, you're going to need 2 candles, right? So we need another candle here. I'm looking for a red one. Okay, so we have a bullish bias in crude, looking for a pullback to this green line or the BBC. Okay, and if that happens, we're going to get inside the DOM here and we're going to left click. We're going to left click in the green. Okay, left clicking in the green means we make money, the market goes this way. If we get a bearish setup, we're going to left click in the red. And if the market goes down, we make money this way. Okay, it's pretty simple. So if it happens, we'll draw a trend line and we'll walk ourselves through it. Okay, so while that's doing that, let's just not stare at the crude for the rest of the time. Okay, let's look at some other markets. I'm going to go to the currencies. Okay, are we trending? That's your first question on your piece of paper, right? Notice the first thing I do, zoom out. We're trading sideways, right? We don't have any lower lows. We don't have any higher highs. And dynamic support and resistance are side by side. Dynamic support and resistance are side by side here. Okay, not trending. Let's go to a different market. Go to the yen. The yen had some prior resistance here. Okay, so I'm not surprised that we're rejecting that level. So again, nothing's qualifying there. British pound, again, another market that's trading sideways. Swiss franc, same thing. Congestion. Canadian, definitely trending. Okay, that one kind of sticks out. So with the Canadian dollar, the normal thing for the market to do is pull back to the BBC, right? Well, here was a perfect example of that. Okay, didn't quite get to the BBC, and we had the down close, right? This is why you draw the trend line. And did we have separation down in the slingshot? Is that green line pulling away? And is that cycle red? It is. Okay. So that's it. So now we're looking for the market to gravitate toward this green line. Okay, it'll fill in at some point. So there's another setup, but we're going to be looking for a bearish setup in the Canadian. Okay. So we'll come back to that one. That one looks pretty good because it had a lot of energy. Energy equals, you know, this kind of price action here. That's stuff you kind of look for. Mexican peso sideways, and the Aussie dollar. Nice leg, nice leg. Zoom out, zoom out. Well, I'll tell you, I wouldn't have taken this one. I just don't see a lot of stuff here. So let's go back to that crude oil. Okay. Maybe we're getting another red candle here, right? So if we do, we'll draw a trend line. Okay, so let that play out. Okay. Let me look at the indices because that's why most of you come to these things. Okay. So here's the point I want to make with as far as markets making higher highs. Okay. Okay. That's a higher high. But I notice this one, how we just poke our head above the higher high and you say, hey, it's trending. But look at this candle right here. Get you right back in that range. Be careful with that. Okay? Be careful with that. Because that's saying, look, maybe just poked our head above the old resistance point and then we're right back in the range. So if I were looking at this chart and I was waiting for the market to really, okay, get long, I would wait for this market to get above this top here before I would entertain getting long. And you notice how this is starting to curl over a little bit, starting to turn red, blue, red, blue, red, blue. Okay. Michael does not drag and drop his position in the Dow. He somehow clicks his new position, then deletes it. Oh, okay. So I know what you're referring to, right? So what Michael is doing, okay. I like the question. Let me try to duplicate it, okay? Because that's the best way to learn it. Let me find something we can sink our teeth into, and then, okay, let me find something. Of course, I'm not going to be able to find something. And I'm going to hope that answers your question. So, and then I think it'll make, okay. And of course, it's the 10-year note. All right. Here's what he does. Okay. Michael does not drag and drop his position in the Dow. Okay. Well, I think you should, Brett. Okay. I think you should drag and drop. But here's what's going on. Okay. So number one. Okay. And this is, I was going to get into a position here and show you how to use the Dow. You know, I want to get into something that is going to be moving fast. So 1 second. There's a point to all this. NASDAQ. All right, so stand by. I just got along the NASDAQ here because it pulled back to the BBC and they had the up close, right? Two things are happening. I created a bracket, okay? I entered the market and my stop is back here, okay? Now, like you're saying, Michael's not doing a lot of dragging and dropping. What he will do, because he's trying to get his goal, is he'll left click, okay, and put a target in. He'll put a target in just to get there. So he's placing a new order, okay? Now, if the market goes up, Then what he's going to end up doing is drag the stop, drag the stop, drag the stop when it applies. Okay, so this is called a bracket order. Okay, so I just got in just to get in. So again, I don't want anyone to push any buttons. Okay, if you click this button here, the bracket option, the bottom of the DOM open and closes. See how it does that? If you click buy stop and sell stop and put the factor at 8, I just happen to be on 16 just to give us some room, but 8. What it's going to do is as soon as you get into the market, it's going to put the stop loss into place. Okay, that's what's happening. So you don't have to push another button. Okay, but what he is doing, because sometimes the markets are dead, right? You're going to hear that in the room, or the markets are choppy, or there's not much going on. What he'll do is he'll left click and drop in a profit target. Okay, that's all he's doing. The kicker is this: if this thing gets filled up here, you're going to have to come down and cancel this ticket. Okay, that's the only difference if you do that. Okay, so again, if you place a target in, if you place it manually, if this gets filled or this gets filled, you're going to have to cancel the other ticket. Okay, or Brett, an idea would be this. Yeah, he'll do that. He'll move the stop up because the rules of engagement are +4 ticks in your favor. You move the stop to break even or your entry, right? So he has to drag the stop, drag the stop, drag the stop. And that's good practice that you should get into. The rules say you don't use a target, okay? I know people that are doing it. It's okay to do it, okay? So here's a possible solution. Let me just, by the way, if there's ever a time where you just want to get out of the thing right away, exit at market and cancel. That's it. That gets rid of everything, both orders, and it gets you out of the position. Okay, but here's what you could do, Brett. As I said in the DOM here, you hit this bracket option. Not only could you put your stop losses in, buy stop and sell stop, but you can also check the sell limit and buy limit. Okay, the sell limit and buy limit are your targets. So check this out. So here's the scoop. I have a stop and target in. All right, I just got long at 76.16 for no reason, just for demonstration. Here's the target, and here's the stop. Now, if this one gets filled, it will cancel this one because it's on the same ticket. Okay? And not only that, you can also adjust both sides. Okay? You can adjust both sides. Maybe this will get filled and make me look like a... All I'm doing is dragging, left click, drag, release. Drag, release. Now I got it zeroed in pretty tight, right? All right, so guess what happened? The market took me out on the stop, but it also canceled the target. Okay, that's one less push button you have to push, Brett. So consider that. Okay, you just got to do what's easier for what's best and easy for you. Okay, it just comes with just practicing. All right. All right. So we just saw some crazy action in the NASDAQ there. So as you can tell, the personality of this market is a heck of a lot different than the personality of that market, the S&P, right? So at some point, you'll gravitate toward those markets that fit your personality. Trust me. Okay. For years, I watched Michael trade the Mini Russell, this race car here. And I was like, man, if he can do it, I can do this. I've been doing this for 20 years. Man, I couldn't make a penny in that market, all right, because it was hopping, jumping, skipping, and I'm not used to that. So you know, my finger was on the mouse every 2 seconds. So I just didn't know the personality of it. So, you know, being in front of the screens and watching things happen, pretty big. Okay. All right, because you're learning. All right. So we're still waiting for that crazy crude to pull back. So it's like watching paint dry. So that's why we go to different markets. The natural gas is quiet.
No, that's Argeo Future. That's another brokerage house.
I'm just going to go around. Gold, there's nothing going on there. And that's fine. The euro. Okay. Notice how I zoom out. We're still in that box. Aussie dollar. Potential short. The Mexican peso in a range. The ES. Okay, we're starting to get a bearish cross, right? The MA1 is crossing the BBC. Okay. Zoom out, zoom out. This one will be a little bit difficult. Okay. What's cool about this one is look at the slope, the slingshot. Okay, the cycle. It's got a nice slope to it. We are getting the cross, but we are running into a little support here. So we're actually, what we're doing is we might be creating a bigger box here. All right. So we were wound up pretty tight here, right? Then we broke out of it. But now we might just be expanding the box. So this could get really messy here. But let's do this. So I don't want you to do anything, okay? Let's go ahead and build this thing. And let me push another button here and show you how this is done, okay? So building the bracket, buy stop, sell stop. The key is once you've checked those boxes, right click, factor in ticks, right click, factor in ticks, make that 16 look like an 8, okay? So again, what that's going to do, okay, it's going to automatically put the stop loss in as soon as we get in. So that's one less push button you have to push, okay? Now, we noted we have the bearish cross, right? Rule number 1, step number 1 is in play here. The MA1 is red and crossing the BBC, okay? So we should be looking for selling opportunities, okay? And what did we just talk about? As soon as we get the cross, I want you to get in the habit of hitting the trend line, okay? So if I'm doing it, you should do it, okay? So now the trend line is engaged, okay? Now what's cool is that the cycle is red. And now we don't really have that slope to it anymore, but it's red, all right? So if price gets toward that BBC, because that's a normal thing for it to do, right? The green line should come above the red line, and we should have that separation we're looking for. Okay, you'll see it take action here if it does. Okay, so we're looking for the market to gravitate toward the green line. Okay, in the process, we're going to draw a trend line just to make sure. Okay, so in the end, okay, we're going to end up left clicking somewhere in the red here. Okay, if it qualifies. All right, so here we go. We have 2 candles we can draw a trend line on, right? Now I zoomed out so we can see it a little bit. Okay, that's our trend line. That's how yours should look. Now again, I don't want anybody touching any buttons because, again, as I said earlier, okay, we have a little bit of support here. So this is not surprising to see this. Okay. We also have, what's this? Dynamic support printing, right? And that's telling us, hey, there's a little bit of support underneath this, okay? Mark's question is, don't we need the candles to be in the wrong direction to draw the trend line? Okay? Bearish cross. What color is MA1? Red. So 2 blue candles are required. Okay, and that's why I drew the trend line underneath it. All right. Let me add a little bit of confusion here. That actually was a down close underneath the trend line, in all fairness. If you're brand new, don't worry about it. I don't want to confuse it. what you're going to focus on is the normal thing. The market pulls back to this green line. Okay? The guys that are CFRN members know this is a momentum trade, and the fact that we have green support dots negates that trade. Okay? But for the guys that are here on day one, we're looking for the market to do the normal thing, which is pull back to the BBC. Okay, so hang loose. We're looking to get short. So if you're drawing a trend line, it should look something like this now. Okay, so let's see what happens. Do we have that separation? We sure do. That run, we have the cycle that's red. That's good for the home team. And the green line's pulling away. So this, along with this, is that separation, right? That divergence, step number 3 is in play. So let's see. Okay. Let's see if this can get up to the BBC. Green line. Okay. So hang loose. So if it touches, okay, that's great. That lights the match for step 2, but then we're looking for a down close or a red candle. Okay. So hold on. Okay, there's the touch. Now this is where Michael would get proactive. Okay, so mark the high is 28.85 and a quarter. Subtract 5 from that, you would end up right clicking at 28.84. Okay, that is your order. That's what Mike's doing in the room to be proactive. Now you're going to say, hey, Bird made a new high. Absolutely. Cancel the order. We're still looking for a red candle. Okay, you want to be proactive. 2 ways you can do this. 1, wait for the red candle and left click. Or, there it is. All right. Oh, that's what we were looking for right there, that close. So this is why he would be proactive. This is a real good point right here. So he would have had an order in right here. And so you and I are staring at the screen trying to get in here, and the market just fell apart, right? One of the advantages of being proactive, okay, is this. Okay, that's something Mike's probably in. Okay, now that's what we were looking for. Okay, so forget about all that jazz. But what's the normal thing for the market to do? The green line is to get into the cycle as it does and make a new pivot low. If we were in this trade, which would have started here, we would be covering that sucker right about here, right now, because the green line is into the cycle. Okay. And if you're not, then you really should have a stop in that's right behind it, because what we expect the green line to do, as we discussed earlier, do that, right? Pull away. Sorry we missed that one, but that one's a perfect example of why Mike does what he does. Okay, that's a good reason. Now, your next question is, I already see it in the boxes, can we get short if it gets back up here? No. Why? We're not trending. We're sideways now, right? We got a double bottom. So there's nothing to do. Okay, we need to break this. Okay? We need to break support. So you can't touch it. Okay? And again, it doesn't surprise me that we're bouncing because we bounced here before. That's why we zoom out. Okay? That's why we zoom out. All right. Mark, did that answer your question? Okay. All right. So let's see if it qualifies. If it makes a new low, we'll look at it. Here's another thing we'll throw at you too. Now we have a few minutes. Maybe you're just, hey, I really like the Dow. Okay, that's my thing. All right, this thing is moving like like a race car right now. What you might consider, if you're into the mini Russell or the NASDAQ or the Dow right now, is not try to trade it on a 4-tick range, but go to an 8-tick range chart. Okay, the same rules apply, right? The only thing that's changed is the risk. Instead of being 8 ticks, it's 16 ticks, but the same rules apply. Okay, look at this: bearish cross, pull back to the BBC with the down close. That's it. What color is the cycle? It's red, and boy, does it have a great slope to it, right? Do we have the separation? We sure do. What we expect to happen, the green line, get into the cycle. Same rules apply. We're just on a larger time frame, okay? What if you're more of a swing trader, right? What's Logic 247 doing? They're looking at 30-minute charts, right? You know, just for the shakes of it. Here's the ES on a daily. Bearish cross. What's the normal thing for the market to do? Pull back to the BBC. Not surprising that 28.85, 86.87 is resistance. But it went above that. I know. But it's the same rules applying. Okay? On a 30-minute chart, Logic 247 is built on 30-minute charts, right? Okay? You look at this chart, where should this S&P get down to? You get down here, right? It tried to get here. We had the bullish cross here. It tried to get here. It didn't. It took off. Same rules apply. Draw a trend line. Okay? So the point is, the rules don't change. Okay? If you learn the rules, you can apply them to the 4-tick range, an 8-tick range, the dailies, the 30-minute, the 5-minute. Okay? Just depends on what you're doing. Okay? So, you know, you can consider that stuff, okay? This doesn't have to be about trading on a 4-tick range, okay? Okay, so again, here's that same S&P chart, okay? Mark, this is how I would draw my trend line, okay? That is a close, okay, in the direction of the trend against the BBC, the red candle. What should draw your attention is this is not red anymore. It's blue, so that's watering down the probabilities, okay? So the trend line is required, so that's why you get in the habit of doing that. And a close below that trend line is also required, okay? The reason why we don't push any buttons at that point, right there, right now, because are we trending? And no. Right here at dynamic support, we got some old support over here too. Okay. All right. It's a little bit after 2 o'clock. We went over a lot of stuff, and there were some decent questions today, so that was cool. Mark, thank you for those, and Brett, you too, because everyone will learn from those questions. Okay. So the takeaways. Okay. There's something that has to be. If you want to put something down on your piece of paper, are we trending is a big deal. Okay, that's one of the big traps that people fall into if they are spinning the wheels. They get caught in a sideways market. And under that, you should have written down zoom out. If you're using DtPro, hit that zoom out button. Okay, that's going to help you identify whether we're trending or not. And when in doubt, just don't push any buttons, right? We know that. The other thing too is get in the habit after the cross to draw trend lines. And we engage the trend line right here. You got to get in the habit of doing that, okay? Because we know the reasons. We went over them. Number one, we don't know if it'll get back to the BBC, okay? It just might have so much bullish or bearish momentum it just takes off, okay? And two, if it does turn color on us, right, like it did here, the trend line is required. And a close below that trend line is also required. So you might as well get in the habit of drawing them in advance. So if it does qualify, you're in a position to go inside the DOM and push a button. Do it ahead of a time and create those habits now, okay? And especially The big one too that people fall into is if this turns color on you and it's pointing against you at a 45-degree angle, like here, the market was doing the normal thing, pulling back to the BBC, and this thing looks like it's falling off a cliff. Okay, you don't want that either. Okay, that's that third disqualifier. Okay, if you want to put all the probabilities in your favor, everything has to be the same color, but you're not going to get those often. Okay, you have to decide. Okay, and as we just said, the normal thing for the market to do on a 30-minute chart is to gravitate toward that BBC, and it looks like we're trying to do that now. So that's it. All right, so I recorded this. If you go out to YouTube and you search CFRN Thursday, all the recordings are in there. Okay, I go over the same stuff over and over and over and over again. Okay, so if you're new, I would check out a few of those. Okay, it'll give you, as I said, that's going to be a great syllabus for you to lean on. Okay, you also have me. I'm only a phone call away, so you can just pick up the phone and call or shoot me an email. We can discuss it. Okay. If you're new and you've downloaded the platform DtPro, what you're looking at now, if you have problems with it, call me at the desk. Okay, we'll get you squared away. And that's it. So I'm recording it. I'll decode it. It'll be up there probably tomorrow morning. And then I'll see you guys in the training room in the morning. Okay. I'm in the background every single day. I'm either answering calls or letting Mike do his thing. If he does take a break or if there's a question, I will pop in and say, hey, look at this, look at that. Consider this, consider that. Okay. So that's it. All right. So we'll see you next Thursday.